What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is February 27th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to talk about why I think we need to prepare for a major move in Bitcoin's price, likely to the downside, as we track some of our key indicators that signal momentum in either direction. And outside of that, take a look at the broader macro picture where we're seeing a ton of signs, whether it be in equities or other global macro indicators, that we're ready for a greater pullback in asset prices. We've got a lot of things to dive into in today's video. If you guys happen to like it, consider dropping a like. It's one of the best ways you can support the channel. And let's go ahead and kick off the rambling. All right, so to kick things off for this week, guys, I wanted to go ahead and do a deep dive analysis on Bitcoin's price, talk about the broader theme here of being in a long-term accumulation channel, which I think is probably the best case scenario for the bulls right now, to understand that we're going to be hanging in this price range for some time. It's the perfect scenario, in my opinion, where a lot of the bears will also get tripped up in the market, but also a lot of the bulls who will be waiting for too low of a price. We're starting to move more towards that neutral take that Bitcoin may be able to start decoupling from equities. But the way I think it's going to do that, according to at least the price action and traditional structure, is that it's going to do it by going sideways as global equities potentially start to flush out. And considering that the FTX collapse, which probably was a major event here and probably going to be one of the biggest in this bear market, happened back here in November and only brought prices down to around 15,500. It may make sense that that could be the bottom, right? So I at least want to go with the thesis here that if we're going to be dollar cost averaging, if we're going to be buying in, we're going to be waiting for price to come towards that range. And there's a lot of things that are starting to signal this. So to kick things off, I want to dive into a really new, exciting indicator suite that I've been exploring over the past couple of weeks to the last month, as I've been trying to see how consistent it is and whether or not it's something worth watching. And that is no other than the indicator suite from Lux Algo. Now, if you guys haven't heard about them, they've got a ton of free indicators out there that you can kind of test out with and kind of get your feet wet with and see whether or not they're fit for you and your trading strategy. But I really like a lot of the premium indicators that I recently got access to back over the past couple of weeks, and it's allowed me to start seeing just how powerful some of these setups are, whether it's spotting short-term resistance with the upper band, or whether or not we are holding continuous long-term support through its green band here. And on top of that, there's its price action concepts indicator, which you also will see on the chart. This also measures the volume profile, or at least a certain measurement of the volume profile in a given window of time, trying to match whether or not there's buy or sell side pressure. And again, what's cool about that on top of it is that we're also getting these measurements here of certain candle patterns. So we're starting to see when there are certain types of market structure setups that can signal signs of tops, of bottoms, all kinds of stuff. And here's the thing that really makes it interesting. If we're analyzing current price action right now, we can see very clearly that this right here is a supply zone. There is a lot of sell side pressure coming in here around this range, much more than the market order flow of buy side pressure, meaning that people are taking advantage, or long-term holders are taking advantage of this potentially becoming a distribution window, a distribution phase for market price, allowing them to offload large-scale positions and potentially take us back down to retest this previous range, where, again, as we've seen in the past, while the Lux Algo is signaling that this could be potential long-term support, and we're going to watch to see whether or not price can hold there. If we look back at that price action concept, there was a lot more sell side pressure there. So again, we've got to be wary here about a potential trend reversal. Not to mention our traditional trend indicators, which you guys can get access to within the Dash report, are also signaling the same sign. Early stage signs of inconsistency in the trend that could yet again signal this is another relief rally. And that's the thesis we want to drive here. Well, I'm not saying Bitcoin's going down to $3,000 or any kind of really far absurd level. I think we need to understand that if this level does not hold, it's going to be the likely sign that we are moving much lower to its deeper price and potentially coming back down at least to the lower band here around 17,500 to 16,500. I don't think that's far out of the question whatsoever. So if you guys, again, are interested in these indicators, what's nice is that you can utilize them across a whole range of different tools. As you can see here, we've got our exclusive indicator from the Dash report tied in here within the Lux Algo. And what's really interesting is utilizing that price action transaction concept indicator, we can find typical supply and demand zones where price is likely going to be drawn towards. Notice here how, again, as prices started to come down, we are starting to see at least some short-term support here on this range at around 0.068 on the ETH to BTC ratio. But again, I think that if you break through this level here, right, we can start to see much bigger setups or swings to the downside. That's where a short on ETH against Bitcoin might make sense, or just generally going short risk on altcoins as markets start to take a risk off narrative. That's the kind of stuff where these indicators can be incredibly powerful. So if you guys are interested, check out the link down below in the description where you guys can get access not only to some of the free indicators, but also as well some of the premium indicators, the ones that we showcased here on the channel. I'm utilizing them in my swing trading strategies. We also as well, what I love about it is we can start to utilize the weekly timeframes as well. And as you can see, prices started to face resistance into this upper band here. So whether or not this buy signal holds is what we're going to be watching for here over the next couple of days and weeks. If we start to get that flip to the sell side, we're going to likely come down into this range. And we better hope and pray that we're not going to be testing some of those lower bands in Lux Algo. There's all kinds of different tools you guys can get access to. We'll continue to dive through the indicators as time progresses. But I want to go ahead, and as we've kind of done our analysis here on Bitcoin, we can see that there is sideways chop in the trend and that there are clear signs that a trend reversal is starting. We have to look no further than the macro charts when it comes to finding the broader trend in risk on assets. As we can see, we had a lot of volume profile up here, and since then have continued on our key momentum indicator to see a move to the downside. And it looks like price isn't really going to have any support range unless we can start to formulate something here in the next few days until we come back down to the range we were at back towards the beginning of the year, since the beginning of the relief rally in January. And we're seeing this across a whole range of indicators. We're seeing weakness in the Dow Jones. We're seeing weakness in the S&P 500, the Russell 2000. The trend is quite consistent across these plays. And as we talked about back during early February, when Facebook or Meta was gapping up 25%, Amazon was gapping up 9-10% on earnings, and everyone was thinking that the times were going to be good again, everything's back to normal, the typical stocks that led over the last decade are somehow going to continue to lead, even though that's practically never how it happens throughout history after the end of a secular bull market. These are all the typical signs, as we saw with the reversal in price, that the markets are ready to come back down. There is not enough long-term buy-side pressure. We saw names like Carvana, Peloton, Roku, all these names, RKK, like all of the big speculative names that did well in 2021, coming back roaring strong. And that's the kind of typical sign of a relief rally, a retail-driven rally by everyday investors. And that's not a good sign. We need institutional support. If you guys don't believe me on this, that the job of inflation isn't done, that the Fed is going to continue tightening, there are 3 charts you guys need to see here. Natural gas prices, right? We're seeing a major resurgence higher here. Our momentum indicator flipping blue here for the first time since back in December, and I really think for the first time since back in November for a sustained couple of candles here. And on top of that, if we really are just taking a look at the chart, right, usually we tend to see that natural gas, once it comes below the 200 week in an exacerbated fashion, that it starts to surge up higher here and come back to retest that range, sometimes even getting above it. So I would expect natural gas at a minimum to come up here into this upper 3-point range here for the contracts for difference. Taking a look at the 2-year yield, this is one of the scariest things here, guys, because the bond market is incredibly accurate at predicting what the Fed is going to do next, as it does chase the federal funds rate. And this past week, we had the biggest acceleration in the federal funds rate, or excuse me, more specifically in the U.S. 2-year yield that we had seen since back, I think, since here in October of 2022, blowing up towards a new weekly high close for this entire trend, the highest point, if we zoom out, since back in June of 2007. Same territory we were right before the 2008 collapse. Now, I'm not here again to say that it's the same. It's a very different environment. The housing market, albeit while it is inflated to some degree, it is not as bad as 2008, and there's a major supply issue, right? So again, and generally in asset markets, everything is different each and every time. Certainly, history doesn't repeat itself, but it certainly rhymes. There are consistencies here. And we know that historically speaking, recessions happen after the Fed starts to pivot. So if we've still got a ways to go in tightening, it means that we are far from the job being over. And it means that we've still got that collapse likely coming in equity markets and likely in crypto prices as well. And last but not least, just take a look at the Dixie here, guys, the dollar index. The dollar has been gaining enormous strength throughout the month of February. After continuing its losses in January, it rebounded, deviated back up high, upward here towards around 100.8 points, all the way to 105.1. And so far here at the start of the week, we're not seeing the trend let up just yet. We're going to have to watch these indicators as we go throughout the week. But again, I think we're easily on par here to, at a minimum, see a deviation above that 200-day moving average, something where we continue to charter higher, and perhaps maybe we get a lower high versus the highs back in September, as the Fed was really ahead of the curve against other global central banks. But time will tell here. We can't be too confident either way. I think we're going to smash through this key zone here around 106, and we'll see how things go over the next couple of days. The key point is this. I don't want to drag it on any longer than we need to, guys. We've seen the inflation numbers. We saw very clearly that it is clear that there's stickiness in inflation, that the market is going to continue to have to recorrect equity prices as well as crypto assets because of the fact that the target rate is going much higher than people expected. People thought that as the Fed was going from 75 basis points to 50 to 25 basis points, that inevitably the next step is 0%. But if we're looking at the prediction markets, it's looking like the Fed not only has a clear chance to continue raising by 25 basis points month after month after month, or FOMC meeting after FOMC meeting, but on top of that, that they may even do a 50 basis point increase. So again, no matter what the pace is, if the Fed's going to keep increasing that target rate, and it's got a long-term projected target of a much higher interest rate for the federal funds rate, this is not going to be a favorable environment to buy the risk-on speculative plays that did well in the last the last bull market. Trust me on this, guys. This is where 99% of traders, I'd even say, who are actively trading are going to get flushed. They are going to lose so much of what they built up over the last decade of easy money. And I would hate for you guys to be chasing this rally, losing more money than you probably already did from the downturn in the market. We weren't 100% accurate on calling that. I'll be the first to say that. But what we're doing here is we're preserving capital. We got out at around 24, 25K. And that leaves us in an incredible position to be able to not only buy discounted asset prices, but most importantly, putting all that aside, to preserve our capital, to preserve the gains we made over the last decade, and to wait until we get the clear signs of easy money coming back into the equation, where the Fed is on our side. The Fed is not on the side of the bulls. It is on the side of the bears now, as it is continuing to contract monetary policy at the most rapid rate we have seen in a long period of time. Probably never before to this degree in the Fed's history. So again, this is a really interesting period of time. It's all about preparing ourselves and not chasing every opportunity, not falling victim to potential market manipulation and thin order books that can easily deceive market investors. So anyways, guys, I just wanted to go ahead and really kind of drive that point home here. But again, we also are keeping optimistic here for the future of crypto. I think there is definitely going to be another bull market down the line. I think there will be names that come back, names that continue to provide value and build real, genuine experiences that people are excited about. And that leads us into talking about one of our long-term partners, Kryxivia. Now, if you guys haven't heard about Kryxivia just yet, Kryxivia is a major multiplayer online role-playing game or MMORPG, similar to games like RuneScape or World of Warcraft, that allows you to explore a really exciting world, build your own character, fight bosses, fight against other players, and so much more. And there's been a ton of developments here since we started covering them as far back as last year in 2022. It's been nearly a year since we talked about Kryxivia and started working with them here over the past couple of months, and there's been some huge developments since we last talked about them on the channel. There's going to be a major gaming contest of over 24 gaming sessions where you can participate within the ecosystem, which is a partnership they're doing with Polygon Gaming, as that's where the NFTs on the network are minted, allowing for low-cost transactions and a wide network of already existing users to participate easily within the Kryxivia ecosystem. So this was a huge step forward they did as they migrated from the Binance Smart Chain back some time ago. And on top of that, on Bitmart NFT Marketplace, they're going to be doing a chest box reveal. So you guys can actually go out and buy these NFTs if you guys are interested. I would recommend, if you guys do or you are considering this, to make sure you've played the game first. You're obviously going to need a wallet, but more specifically, just to get a feel for the game and see whether or not you'd want to invest time and participation within the Kryxivia ecosystem. But these kind of partnerships are showcasing that Kryxivia is moving fast, and exchanges and different types of partners want to be involved within the game itself. As the game itself, back in mid-February, already had over 5,000 players. I think now it's probably well on its way towards 7,500 players, or potentially even towards the big 5-figure value of 10,000 players. There is a lot going on in Kryxivia. So I recommend, at a minimum, that you guys get your feet wet, go out, try the game. It's free. It's very easy to get set up. And there's some really great tutorials on YouTube on how to kind of get started, how to get easily familiar with some of the game mechanics. It's a game that I definitely think you guys shouldn't be sleeping on. It's probably the most advanced MMORPG game, and that is the genre that is most ripe to benefit from tokenized assets, NFTs, and so much more. But I'll go ahead and leave a link down below in the description you guys can check out for them, as well as LuxAlga, any of our partners here on the channel. But that's going to be it for today's video. I highly recommend you guys keep active, keep doing your research, keep in cash at the moment. Wait for those opportunities to strike on, and I promise you all, we will be making those moves when the time comes. If you guys enjoyed this video, consider dropping a like. As I mentioned, it's one of the best ways you can support the channel, and I'll see you all in the next video. Take care, everyone.